everybody. Hello, everybody. Pleasure to be here. Pleasure to host you, David, here on stage today. We just met in person for the first time now, even though we were kind of at the same events. But I have a funny story to begin with. So recently, I kind of heard from the network, wow, there's this amazingly hot startup called Flow Engineering. And they're really involved in building, connecting softwares in the whole hardware engineering space. So it's a really ambitious project. And I see your name as an angel investor. And I tried to get in as well. And they flat declined me and said, nope, sorry, no chance. And the Stripe founders are involved, and Sequoia's involved, and you're involved, and I got completely rejected. So
I'm sorry.
Here I am. And I will ask you maybe if you can help me to get in the next round.
Happy to try.
So that would be.
I may have some pro rata I can sell you.
That would be great. Yes, with a discount, please.
I'm an early investor in the company.
With a discount. So David, you were a very early investor there. Anyways, so I would like to start. You said recently it's kind of embarrassing how fun climate crisis is to work on. So I think in a way it's nice to see, that this is not a doomsday talk here today, but actually we're going to put a positive spin on it. So I'd like to see your thoughts on that.
I can talk doomsday all along. I'm actually really pessimistic, but that said, my background is founding a company, Unity, and I'm really proud of that. And built that up. It's still on the board. But like 11 years ago, I stepped out of my operating role. I woke to Earth. I invested in a bunch of startups. I found some deep tech startups that were really exciting. And they were all thinking climate sustainability. And I was like, I know what to do with these guys. And from a teenager, I was worrying about the climate crisis. So I basically decided a few years ago I would spend the rest of my career on climate. So I built a venture fund on the theme, but also as an angel and LP, and also it's like non-profits. I kind of do full stack climate. And there's some really, really bad things happening. The good thing is, it's really fun to work on. There's really smart people, good solutions that are competitive in the market. We get to invest in them. We think we'll make money on those. If that's enough to save civilization, I'm not sure.
Okay. And is there for you you love how there's so much potential, but it's that intersection to the impact as well? Is that a driving force for you in that space?
Yeah, I'm a little post-capitalist in the sense that Unity built me some wealth. I could also not work so much, but when I was a kid, I was told, I think many of us, that money is power. And then I made some money, and I was like, where is this power? How can I what's the levers to save the planet or do good things? And I'm looking for these levers. Frankly, that's what I spend most of my time on.
Nice. May I ask the audience, how many of you are directly involved in the impact space or just here out of interest? So directly involved, 50%. Okay, that's nice. And many people coming out of interest. Great to see. Perhaps that's the capitalists. Huh?
I like capitalists too. I'm a capitalist in my kind of work time.
Yeah. So you were here in 2021.
Yeah.
And at the time, of course, sustainability was the big buzzword. Yeah, massive hype around that. And now, unfortunately, because of Trump and wars and whatever else, you don't hear much about it anymore. What has changed in that sense from your point of view?
Yeah, so you're right. I mean, if you go back to, let's say, pre-COVID or maybe slightly after COVID, sort of the COVID peaks, if you ask people in the West what's the most important problem, some majority would say climate, right? And we started working on this before, and have built a venture firm. We invested in 27 companies, and it's going well. We're investing out of fund 2 now. Still fundraising if you have money, but we've raised quite a lot of the fund.
Okay, do you want to share your email for
David at transition.vc.
Any ticket interests?
But what unfortunately happened is, Trump is one thing, and the sort of the stuff over there, but it's the war, right? And the war has triggered this kind of series of worries about wars. And it's just very, very hard for people to think about long-term potential problems when there's a short-term acute problem near them. So that's sad. The good thing is a lot of the climate solutions are now cheaper, better. They're downhilling. Like power is getting cheaper because of more plentiful, let's say, because of renewables and so on. So that's kind of inevitable. And the companies are still being founded. People still see the problems. And yes, it's not as hot, but that's kind of to some level okay.
You say it's not as hot. The main way that that has impacted the space, is it the talents gyrating more to the vibe coding, and there's less talents of exceptional talents involved, or what is the difference then that it's less hot?
There's still company formation. Talent is still going for it. The good talent is kind of longer term thinking maybe. So it's not only following what's on the front pages. I think where there's a problem is with some policy. Some of the feeling that we had before. I think all corporates had a feeling before that, okay, in a few years, there'll be more regulation, it'll be more limited, I should really focus on my sustainable projects. And that feeling is to some level gone. We can't expect there to be more regulation in 5 years than there was now.
Yeah.
I think it'll happen, but people don't expect it. The good thing is there's enough kind of downhill projects where they're just better, cheaper, faster, being bought by corporates that want better, cheaper, faster, that we can find enough technologies, startups to push into big production.
Yeah. Okay. May I ask you for a recent example then of a startup that is really most exciting to you, where you're involved in or not involved in? Something you've seen?
Sure. I mean, let's just take a really simple example actually. Like electric bikes, right? Electric bikes are great. They're small battery, they get you really far. You don't break a sweat. You can kind of use them as a vehicle, way better than gas-powered cars and electric cars for many things, not for everything. The growth of electric bikes is, it's already went from nothing to a few billion. It's going to go to 100 billion and beyond in total market, right? A lot of manufacturers, a lot of different bikes. Now these bikes become second-hand bikes kind of fast. They get sold and traded, and we found a company that is is placing themselves as the best kind of reseller, guarantor marketplace for e-bikes. It's a company that we think went from a few $1 million of sales to well over 100, and we think they'll go. There's no reason why they won't keep growing for many years from this on. From here on out, in multiple markets now and so on. It's called Upway, amazing company. We're very proud to be working with them.
Can you share the name?
Upway.
Oh, sorry, Upway.
Yeah. No, so that's just one example of, it's not deep tech as such, but there's a lot of kind of weird deep tech knowledge of the electronics, the batteries, because people like buying things with a new guarantee, so you have to kind of understand what's in there, test them, make sure it's all good, safe, because batteries start burning if they open up. So a lot of wisdom in a company like that. It's kind of simple, but it's it's going to go far.
You mentioned deep tech. There's a lot of founders here in the audience as well. Yep. Can you give an example there, and
sure.
Perhaps also a space which may be an inspiration to people here thinking about what can I build actually?
Yeah. So one of my favorite founders, James Dacombe, he founded about 6-7 years ago a company using lasers and standing sound waves, ultrasound waves, to look inside the brain. And he built that into a medical device company, really impressive, called CoMind. Along the way, he had a realization that you could use these lasers and light sensors, like light chips, like CMOS chips, to do calculations, matrix calculations. And with a couple of kind of enabling innovations, he could basically build a computing device that is faster than an NVIDIA chip. So he started building this company using 10% of the power, and a company that can grow. We see a path where they can become not just a little bit faster, but much faster than kind of silicon chips over the next 10, 15, 20 years. There's another company. Is it climate? Yes, because data centers is the one thing that grows in power usage across the world. So if we can reduce the power consumption by 90%, that's a huge deal. Guy came in with kind of a technical insight, built a team around it, raised a bit of money from good people, and is now off to the races.
What stage? Where is he at? Where is he at more precisely now?
Sorry?
Where is he at? Where is he at with the?
He raised A round this summer.
Okay.
But a big A round.
Okay, and the deployment at scale. When do you think?
Over the next few years.
Yeah.
There's a lot to build.
It's not too far away, huh? It's
No. It's a lot to build,
amazing.
but it's also they've made incredible headway. That's Flux computing.
May I ask how many founders or pre-founders are in the room? Okay, whoa, that's a lot. Cool. So more than 50% there. Nice to see you all. Good luck with your endeavors. So you're a Decacorn founder.
Yeah.
So I guess for most here, that's still some way to go. That's obviously super, super impressive. What was, then for the founders here in the room, one of your learnings along the journey? Backstage, you said one of your things perhaps that held you back a little bit was your hesitation or lack of confidence in yourself.
Sure.
Can you tell founders or pre-founders here a little bit?
So I was just a programmer since I was a kid, and then I started building a software business with two friends of mine, and we started building, and we knew nothing, right? So just as a visual of how insecure we were three coders, so we needed a business person, right? So I kind of flinched telling this story. My knees hurt. But we literally created like a page saying like, startup CEO, business CEO sought. And we put like phone numbers and little strips of paper. And we hang it up in the business school of Copenhagen. It's a true story. I'm not making this up. And we got a few phone calls, actually. Some of them were like maybe really not very clever. But there were some clever kids that actually called us. And we were considering, do we hire this really clever kid, to be CEO? And it might have gone well, you never know, but we were learning, and there was never a moment, always we were like, but maybe we know this a little bit better. But what I'm trying to say is that we were quite insecure. So then we started selling this product globally, and marketing and sales, and talking to big customers, and yada yada. And there was just many times when we just felt that somebody else outside the company probably knew better, And then I was lucky that our first venture round was with Sequoia Capital.
Their first deal in Europe, I believe, at the time?
Might have been second.
Or maybe one of their first
second,
ones,
actually, after Startall, which they'd done years before. But I moved to the Valley, and a young-ish venture capitalist at the time, Rulf Bota, joined my board. He's still on my board. And he, quite a clever guy. Maybe one of the smartest people I ever met. He was a math Olympian, but also just seen the best of what startups have to offer. And I remember at some point I had like a bad idea for a new business line. We wanted to do some games publishing. It was really quite stupid. And I told him, and he was like, "Are you sure, David?" And I was like, "Yeah, I'm pretty sure." I said, "Okay." So I went and did it, and it was a bad idea. We wasted a few $1 million. It was fine, no big deal at the time. But I came back to him later and like, well, it didn't work. And I was like, but you knew, right? And he's like, yeah, I kind of knew it probably wouldn't work. So why didn't you stop me? And he said this beautiful thing, which is, well, in the end, we have to trust the intuition of founders. And you could have been right. But also, if I had started kind of telling you not to do it, you might have started sort of trying to do what you thought I wanted. And you would have started doing this kind of interpretive dance of what you thought some investors wanted you to do, and then you really lose connection with the thing itself, and that's a very dangerous thing. I've seen that also with executives. You tell a middle manager, "I want this done," and the middle manager doesn't understand or thinks it's a bad idea, but starts kind of trying to go through the motions of what you might want, right? So just that insecurity is a very dangerous thing to meddle with. So the best advice I got from investors was really just like, whatever you think is right, go for it hard. And then when you make a mistake, just come back and do something else.
But you also, I mean, it was also sometimes a form of hesitation on your front, and you see that sometimes now with your portfolio companies, with your founders. How do you help them in that moment when they're completely blocked and hesitant? What causes the hesitation? And then how do you help them? Yeah,
it's really tricky. This is how running a company is a liberal art. I mean, it's not engineering. There's never like one right answer you can get to. It's more, I don't know, a lot of the time is, of course, you can give some advice, tell some stories, point to some facts that they may have made or missed, maybe something about the macro, the industry, or the value chains, or whatever. But a lot of the time it's just creating space for them to kind of sit with that uncertainty, and then, hopefully they'll come to the right decision at some point. But sometimes this is like an hour. Sometimes it's like half a year, where you have to sit with not knowing. And I, at least when I was trying to make decisions, sometimes if a decision wasn't happening after like 5 meetings, there was a really good reason, and maybe we just didn't know yet. And sometimes it's really the right thing to wait. It's
So
hard.
your advice is really work on building that clarity, huh?
Just sometimes you just have to show up meeting after meeting, and maybe you make a decision, but then you get uncertain, and you have to kind of allow yourself to go back. It's tricky. I mean, most of these entrepreneurs have a great bias for action, and that's healthy. And sometimes just moving forward, trying something out is better than sitting around. But sometimes sitting around is the right thing. It's a liberal art. It's all kind of very, you've got these kind of irreducible trade-offs, and you really can't know.
Shall we? I mean, again, there's a lot of founders here, so many of them will also be, everyone is looking to raise capital. Let's move into that a little bit. What you, with your investor hat on now, what do you want to see from the founders here, which makes you, after 1 hour meeting, give them a 3 million check? What are the buzzwords that you're looking for, which they need to work on for that 3 million check after an hour?
Well, I'm trying to ignore the buzzwords to some level, which is not healthy. So if there's an AI buzzword in there, I'll try to
No, but personality, characteristic buzzword that you're seeing about the person also a lot.
I mean, you're looking for people that you just know are going to get it done, right? They're relentless. They have some insight of the market. They have some understanding. Maybe they've cracked a technical problem. And they see some big picture, they see a direction, and you have to kind of live through their vision to some level. That's also maybe what I lean into. Then other people on the team will be better at questioning the market and the growth plan and the financial model, which is important. I'm not as good as that. So some kind of collecting those. But no, you want people that are really ambitious and trying to take on something big. In our case, it has to be a business that can grow really, really, really big by itself, by extremely hard work and a relatively small amount of financing. But then we have this dual underwriting as an impact fund where we say it has to grow really, really big. And then if it grows as big as we think it will, it'll have this very positive impact on the world in this and this way. And we have these two bottom lines, right? And not mixing them up is really important. It still has to have a cold capitalist kind of path to grow.
And some more characteristics, perhaps, like a certain curiosity instead of extreme stubbornness, or is there anything else there that you might put high importance on?
Maybe it's, because I've been working with entrepreneurs for I don't know, I stopped counting, but I guess it's almost 20 years. First as friends, and then angel investments, and then of course now as an investor in a bunch of stuff. No, I've really concluded that there's no one pattern to this. I don't like assholes, but they can be a little bit edgy, that's okay. Or they can be quite gentle. They can be kind of people that make every room kind of boil with excitement. Or they can be people who burn slowly in on you and really convince you. I don't think there's any one path. I was always a very gentle entrepreneur. I was kind of a little prickly when I had to be, but a lot of the time it was just sitting with my team, thinking things through, being really passionate, showing my customers that I loved them and they really cared. But internally in the company, it was a lot of space for reflection.
Okay, raising. Let's talk into raising that round. You've been through the art of fundraising. How would you? There's the one end of the spectrum, go hard, announce your round big, and get that startups going. Or there's the other one, which is very subtly, no, I'm not fundraising, but start building those relationships where suddenly someone like you will be desperate and feel FOMO to want to preempt. Which way should the founders here go to get your money?
I honestly think there's no clear path. I mean, a lot of the deals we create at Transition, it's we go out, we find the company, we think they're exciting, they're not racing right now, but we like going and convincing them to take a round. That's not always possible. And of course, once we do that, they will talk to other people they know. I mean, that's a great. I mean, if you have something that's great and working, and you have already cash enough that you're not running out, and people approach you, no, of course, that's best. But it's not that's always practical, right? What you really just shouldn't do is have a process where you sort of talk to one investor, then you let it go, you go talk to another. I mean, that's obviously the worst, and that tends to kind of really fail as a strategy. But I don't know. There's so many ways of doing it. The most important thing is just building something that is like inevitably going to happen. The company will happen. You see it's happening. Every month there's some progress. Great team. Because then for 100% you will attract that money, right?
Okay.
The good thing is this is something you can control, right?
Yeah, sure. Big picture. What about? I mean, we probably will need nuclear energy coming up soon. Are you looking at that space as well?
No, I've actually. There's some nuclear companies I like. We tend to invest in things that are like more ready to scale, ready to go. We like things that are like, you made it work, but now let's commercialize the hell out of it and really scale it. Most nuclear isn't there. But as I'm a private investor in nuclear, of course, I think it's important, or has a lot of potential, let's say. But frankly, like a lot of the solutions that will save us if we get saved are just existing already. Like a lot of solar, a lot of wind. Now batteries are coming online. We invest in batteries because that's clearly what's going to balance the grid and make it all kind of fly. And this is all happening. We don't need to wait for something hypothetical.
You invest in batteries. I invested in a flywheel that they're putting 500 meters under the ocean to contain the forces of this flywheel spinning at the speed of sound. And it can store 60 megawatt hours of energy. It's called Thalaron. Out of the UK, so it's fascinating examples of what's happening.
It's a very cool
for
company.
short-term renewable energy storage, which is the use case for the batteries as well.
That's a really cool idea. I know this startup, of course.
Yeah, very good. Since we're coming to the end here, one big word of wisdom, what you would like everybody to take away from this Slush 2025 and going into 2026.
I sort of alluded to it earlier. Like, at some point I got asked, what's the biggest like learning in your journey and so on. And I think it has something to do with confidence. Like, but it's really tricky because you want a lot of confidence, but you also want a fair bit of uncertainty, and you need to hold them sort of very gently both. No, but a lot of it is just like, once you've been building on a startup for a while, depends on a bit on what it is, but let's say a couple of years, few years, now you are the world-leading expert in this one thing. And nobody else would really be able to tell you, the most important things you need to know. So honestly, just sometimes like trusting yourself and kind of moving fast. And then, of course, being ready to kind of course correct once you realize you made a mistake, and you'll make many mistakes.
Mistakes are the best opportunity to learn and grow. They're essential.
One of the things people say is, we learn more from mistakes than success. And then I look at the successful people, and they clearly learned a lot more. So I'm actually, I always felt bad about this kind of statement, But then I think I concluded it that, well, when you're successful, you'll have time to make more mistakes and learn from them along the way. So it's something like that. But no, mistakes are, inevitable.
Have you defined for yourself what victory is going to look like in 5 years' time? Like, is it returns generated and impact generated? Do you have like a kind of a value that you've associated to those two? So, I mean, like being part of the journey of several like really generational companies that are doing something very important and having a very big positive impact, and showing our investors and our non-investors that you can generate great returns from these companies, thus attracting more money into the space. I think that's kind of how we, if we pull that off, then we'll be very happy. Very good. And proud. Thank you very much. David, please a big round of applause. Thank you, Nico. Thank you very much for your attention. Enjoy the rest of Slush. Amazing.